Good morning, everyone. Thank you so much for joining on our weekend. Before we get on to the discussions point today, doing my customary introduction, while most of you are already aware of it, but this quick one again about Lawrbit. We are a regulatory technology company, a RegTech company, where we offer multiple GRC solutions. The key one is global compliance management solutions, which helps organizations manage their regulatory obligations effectively globally, not just in India, but globally as well. So we have served our clients in the past in around 70 plus countries. Today, our software is being used by 225 plus entities, covering around 1,200 plus locations. We have a team of around 50 plus legal experts who are providing these services, who are working on the back end. We have created a huge database of laws and compliances. Throwing some numbers, around 2,000 plus laws and 60,000 plus compliance in India itself, and 55,000 plus laws globally. And these are getting updated on a real-time basis with thorough analysis as to how the change is going to impact the compliance which you are doing, without you spending any time on researching those laws and compliances, and as when the things are changing. So that's a pretty effective one. Whenever you need any compliance solutions, please reach out to us. We are always there. And with this, let me quickly jump on to our discussions for today. Vivek, I'm still not able to see you.
I rejoined and
Yeah. Yes, we can see you
my
now.
camera is
Yes,
okay. Great.
we can see you now. Great. Thank you. Okay, so let me quickly introduce you to our speakers for the day. Mr. Vivek Kumar. Vivek is a qualified company secretary and a lawyer. Comes with around 17 plus years experience, been in the market and work today. Also, he's working with one of the leading logistics company in India, the listed company. And he has experience in infotech, airport operations, hospitality industry, so multi-industry understanding, which he carries with him. And the company which he's working with, wherein he has a huge responsibility, because this is company possibly has the reach in every district, or not every district, every small village of in India as well. They are everywhere, and being a SEBI listed company, a lot of responsibilities come onto their head. So Vivek brings in a lot of understanding, exposure in this subject, and we look forward to hear you, Vivek. Disclaimer: the discussions what we are having, the views we are sharing here, these are all our personal views. These are all our personal understandings and experiences. It has nothing to. These are not. This should not be taken as a advice to anyone. This should not be taken as a opinion. Do your due diligence, and it doesn't come from the organizations which Vivek and Mr. Rajan they represents.
Thank you,
Mr.
Jyant.
Rajendra,
Thank you for the wonderful introduction. And good morning to everyone present in this webinar.
good to have you, Vivek. Thank you for joining us in the morning today. Uh, Mr.
Pleasure.
Mr. Rajendra Punde, you heard him in the last webinar on ESG, and we continuing that discussion today, moving toward BRSR. Mr. Rajan is a qualified lawyer and a company secretary. Comes around 30 plus years industry experience. He has, I would say, he has seen things evolving. He has seen things changing in the country, from both from an economic standpoint and from a business and the regulatory standpoint. Worked beyond India, in global territories, and and seen those best practices getting implemented in India as well. Governance, ethics, ESG is one of his favorite subjects, and whenever I have spoken to him on these subjects, and I've always gained a lot of insight and the new perspective. Uh, Welcome, Mr. Rajendra. Thank you so much for joining in today morning, and we look forward to hear your thoughts on these subjects today.
Thank you, Jayant, and very good morning to all. As Jayant mentioned, I mean, what better time to spend a weekend starting on Saturday, than getting together and talking about something like this, because I think otherwise we would really are hard pressed to find time. And worked with the Lawrbit team earlier. They have a fantastic team and fully aligned with what thoughts Jayant mentioned in terms of how ESG is really very important. So the earlier webinar was a good starting point, and I look forward to continuing the discussion with Vivek, who comes in with a hardcore practical experience, post ESG's implementation now. Thank you, everyone.
Thank you, sir. So I also have my colleague Mayank with me. Mayank is a company secretary and lawyer. Uh, Comes with industry experience, and at the same time, the experience on the compliance solution perspective. He has been he's been one of the founding members of Lawrbit, been have worked with all our clients which we have right now. I think 35 plus industries is what Wank has experience of and exposure of working with. These include some of the largest name in the market, top 10 in BSC, to a startup, a smaller one, with varied experience. And we also look forward to hear Mank's thought on the subject. So Mank, over to you. Let's start the discussions.
Thank you, Jan, and good morning, all. Welcome all to this webinar. So, in last webinar, we had discussed ESG as a concept, ESG as a concept. Now we will going to discuss the reporting of ESG. So, what we'll going to discuss? What is the agenda of our today's webinar? Next slide, please. So. In today's webinar, we will going to discuss about the evolution of BRSR, how BRSR considered as an indicator of ESG health of the corporate, why certain changes being brought up by the regulator, especially by SEBI, why as they have first introduced BRR, that is business responsibility reporting, and then they came up with the BRSR, that is business responsibility and sustainability reporting. So why they have replaced, what is the difference, we will discuss during the webinar. We'll discuss the structure of BRSR along with the core metrics behind each disclosure in detail. We'll also try to understand the responsibilities of entities towards value chain partners, disclosure with respect to value chain partners, challenges which may arise while disclosing the details of value chain partners. Other aspect of such reporting is the correctness by obtaining reasonable or limited assurance. And we will also discuss of some of the international frameworks and guidelines on ESG reporting. Next slide. ESG reporting structure is rapidly changing. This slide shows ESG reporting journey has been marked by significant progress and evolution. In November 15, SEBI has mandated top 500 listed entities to disclose the BRR as a part of their annual report. Then in December 19, SEBI has extended the disclosure of BRR to top 1,000 listed entities. BRR served as an initial spark to the disclosure, leading to more comprehensive, hence robust business responsibility and sustainability framework introduced by SEBI in 2021. Then onwards, SEBI keeps adding to the basic BRSR by further amending its regulations to implement BRSR Core in June this year. In July, SEBI came up with Master Circular, wherein proper guidance has been brought up and formats being introduced. Later on in July, SEBI has introduced framework for assurance and disclosure for value chain partners and guidelines of material events. Now I hand over to our speakers. Over to you, Mr. Vivek and Mr. Rajendra.
Vivek, you want to go first?
Yeah, sure, Rajendra ji. So, Ministry of Corporate, thanks for the introduction of what BRSR and BRSR Core and the principles and the core elements are there for Mike. And just to add on top of that one, Ministry of Corporate Affairs had come out with a national guidelines on responsible business conduct, NGRBC. So this was the policy document issued by the government, which prescribed 9 pillars of business responsibility. These are the thematic pillars, and these thematic pillars sum up the core the sums up the principles through which the responsibility of any business can be implemented, can be reported. And each of these thematic principles had some core elements which were essential for their operationalization and implementation in the company. So from these thematic principles, some core elements are derived, and uh, after an organization has implemented the principles through the core elements, uh, there are certain reporting requirements. There are key matrices through which these core elements are measured, and some of these key matrices have been put forward into BRSR draft template report. And companies are required, top 1000 listed companies are required to adopt this template. And there are certain essential indicators in this template, and there are certain leadership indicators. While essential indicators are compulsory in nature, there is an assurance requirement also. The leadership indicators are more so of a voluntary in nature, wherein the organization which are evolved in terms of their BSR principles can make such reportings, and there is no such requirement of assurance on those particular key matrices. So this is the overall flow of how we come to BRSR today. So to sum it up in simple words, policy document given by the Ministry of Corporate Affairs, which is called National Guidelines on Responsible Business Conduct, under which 9 thematic principles has been prescribed. And to operationalize these principles, there are core elements of each principle. And these core elements at the end of the year, while preparing a report, while demonstrating to the society and stakeholders, we'll also go in detail what the stakeholders are. While demonstrating the responsible business conduct, the BRSR report is handy. So this is a new regulation that has come in for the listed companies, though it was there since 2015 also, but it has a large implication now onwards. But somewhere or other, it is also inspired by global principles. So a cross reporting is also permissible. So coming to our slide, which we see here is difference between business responsibility and BRSR. There were certain ESG reporting framework which was earlier given in the BRR report, and the scope has been widened, and now the report is aptly named as Business Responsibility and Sustainability Report. So rather than simply focusing on environment, social, and governance issue, we also need to focus on additional principles, which one of them is sustainability. And that's why change in nomenclature, change in reporting template, and the principles also have been made applicable to a larger set of listed companies, plus their value chain partners. Value chain partners, just to understand it upfront clearly, is any it integrates backward and forward integration of your customers, suppliers, and customers respectively. Those suppliers which constitute 75% or more of your inputs, or those customers to which you supply your services or products, more than 75% of the total services or products are your value chain partners. So a listed entity in between the chain has to report not only for itself, but it has to report for its value chain partners also. Not all the reporting for value chain partners. As we go along, we'll understand there are a limited set of information regarding value chain partners that needs to be disclosed. And some of them are under essential reporting, some of them are under voluntary reporting. Yeah.
So Vivek, what I understand from you is that while it is written as top 1,000 listed companies in India, but in a way, even if I'm a smaller entity, but working with a big, on the top 1,000 listed entities, maybe as a supplier also, then also I'm supposed to be aware as to what these regulations and guidelines are, right? Because somewhere it is going to impact me, whether it's, as a part of a value chain partner or reporting requirements are already, right? Yes.
Absolutely right, Jayant. So the consequence of this reporting is far-reaching. Uh, the businesses which are listed definitely have to look at it. Businesses which are which deal with listed entities uh, should also have a look at it, because if they have to themselves determine, obviously in consultation with their the customers or suppliers which are listed companies, that they have to determine whether they are value chain partners for any of such companies. If they are, there are certain obligations that they need to follow. And I think a proactive management, whether a small organization, non-listed organization, or a large listed organization, a proactive management will have a look at it and will definitely prepare its organization for the information that needs to be made public. And the governance principles, business responsibility principles, are as of now totally voluntary, comply and explain basis. And it gives very key matrices for the organization as to how they can better operate their business in terms of employee well-being, in terms of their business sustainability. There are interportability of various regulations and reporting that come into BRSR. So if suppose an organization is a supplier to a large um, automobile manufacturer, for example, a component or part manufacturer of Maruti Suzuki, of the Suzuki brand of cars that we have in India. So if a supplier is a value chain partner for Maruti Suzuki, it will have to look not only from the perspective of BRSR reporting, but there are consequences flowing from Environment Protection Act, from Pollution Control Acts, and labor codes that needs to be reported anyways. So a proactive management should always be on a close toe with the BRSR reporting format.
Okay. Thank you.
Sure. Yeah, Jayant and Vivek, and thanks for this. Just a few thoughts on what we discussed. So, just going back to the earlier slide where we talked about whether BRSR is actually an indicator of ESG, I would say clearly yes, because it is, as Vivek pointed out, has evolved from an earlier, role, and it now has this 9 parameters, which indicators, which very clearly call out, and needs to be included in the reporting as such. Going along to what are basically the differences between the BRSR and BRR as it was earlier. Again, just to add a bit to what Vivek explained. Earlier, there was just a universal single format, which is now divided into essential indicators and leadership indicators, which again, initially just about 59 to 60 questions, I believe, which is now moved up to 140. With 98 I guess, which are mandatory, and 42 appear to be leadership. Again, mostly earlier version was qualitative. This is both qualitative and quantitative. And there are 3 reporting sections in the BRSR, which is general disclosures, management and processes, and then principle-wise performance. Going on to the the conversation that we've been having about the what can we go on to the next slide, please, Mayank? Yeah, so the BRSR and BRSR code is what we'll discuss. But before that, I just wanted to briefly come back on, the comments that the applicability of BRSR and the reporting obligations on listed entities. My friends, and when you will talk about value chain, yes, we are reaching out to the unlisted entities, private limited companies who are in the value chain for listed entities. But let's be aware that the government is very clearly looking at ensuring that there is a more rigorous compliance by unlisted companies. In fact, a very recent a news report called out that there is a there's a company law committee which is going to look at having rigorous regulatory framework for unlisted companies, specifically those that are big in size. And in the BRSR also, the SEBI has called out as BRSR Lite, LITE, which can be voluntarily picked up by unlisted companies, because any regulation which is in this direction, which BRSR entirely encompasses all that an entity is required to do and what investors and stakeholders expect from an entity to conduct its business in a manner that is sustainable in terms of environment and social obligations, and very high on governance. So these are a lot of these are aspirational goals, objectives for a company. And as long as a regulation as the longer it stays along, it's difficult to try and dilute it by challenging its contents and its formats and stuff. But people have to, and corporates have to progressively get into the compliance mode. And SEBI has gone a step further. A very comprehensive guidance note calls out what exactly goes into essential indicators, what goes into leadership indicators, how you are supposed to talk about it, how they are voluntary in nature, and how companies should aspire while they are voluntary in nature to get into and comment also on the leadership indicators. And they are also assuring, or they are training and incentivizing, motivating unlisted companies to do it. So while there is a government mandate which will surely come in, the other push also comes in from listed entities, as Vivek pointed out, in when they talk about the value chain. You have to reach out to those entities which are currently your suppliers or your customers, and they comprise a significant, let's say 75% currently is the threshold up to which they are contributing to the company's business. So these are all I would say wheels in motion, and progressively they're going to reach aim at reaching a situation where the ESG compliance mandate will apply across the country. And then it's going to be more, it's actually moving away from, is my sense, just a tick box culture. It's coming into the granularity of what exactly an entity is doing on the ground. So investors, and even earlier also I mentioned in the call before, that investors are not very impressed by what your commitments are. They really like the documents you make on ESG, but they really want to see how you are actually walking the talk. What exactly are you doing on the ground? And the examples of Suzuki, a car manufacturer that Vivek brought out, is absolutely spot on, because there is tier one related vendors. You can still, maybe big in size, and they can appreciate, they have the resources. Because remember, whether it's a listed entity or an unlisted entity of whatever size, the challenge is resourcing, allocation of budget, and getting it right there. So these things are really going to be very important, and also challenges as we go along, and we'll talk about those things in as we move along. But over back to the slides, and over to Vivek and Jayant.
Yeah, Ankita, let's move next.
Yeah. So coming on to this slide, the current structure, the present applicable structure of business responsibility and sustainability report, BRSR, what we'll refer to as during the entire webinar, is divided into three sections. Section A is a general disclosure, basic information that about the company and the company's business. Section B relates to management and process related disclosures, whether there are policy and processes in place or not. What is the who is the governing authority, who is the top management authority looking at these all policies, processes are implemented or not. And directors also have to make a annual affirmative statement in the annual report on this one. So, and in addition to that one, section B also uh, also requires disclosure whether all the 9 principles are periodically reviewed and the processes related thereto which the company has adopted. They have to be, they cannot be one-time process implemented for the lifetime. They have to be a dynamic process, and whether there is a periodic review of those policies and processes or not. And details of any external assessment also has to be provided. So if as I mentioned in my previous slide, that there are matrices which are essential indicators, and for those it is mandated that there should be a external third party independent assurer. So we have to confirm whether that assurance has been taken or not, and if it has been taken, what is the reason for not. There is no penalty as such, but we have to explain why it has not been done, whether the company does not believe that those particular principle requires any affirmation or assurance, because that those may not be material to that particular entity. Whether the company is right now at a stage where it is in the not in a position to formulate and implement the policies, where there are human or technical resource not available, financial resource not available to get this implemented. We all understand that compliance policies and process, they have a cost to implement. They have a cost to gather data and report it in the annual report. If any company in financial distress or company which is challenged by human resource also, because this is a new subject and maybe not everybody would have sufficient skilled manpower to map this, collect data and report this. So all these practical difficulties has been listed out, uh, and this can be as the mechanism is comply or explain, so this can be put out as explanations. So that covers section B. Now section C is something that we have to look more in detail. We'll just understand as to what it contains topic wise. Section C is, as I mentioned, there are 9 principles. Each principle wise there are core elements, and each core elements has matrices, essential indicators and leadership indicators. Those have to be reported, and we will, as we go along in the next slides, we will see in detail this particular portion. Section A, the new additions, section A. Yeah, so we are there in the detailed slide of section A and B. So general disclosures, basic information about the company, SIN number, name of the listed entity, year of incorporation. These are all routine information. Name and contact details of the person who can be contacted in case of any query on the BRSR report. Has also, this needs also be published in the annual report. So the direct access has been given to all the stakeholders, to all who have an access to the annual report, basically the general public, government and everyone. They can directly reach out to that particular person and ask for clarification on the BRSR report and ask for further data to the extent possible by the company to provide out in the public domain, obviously. And it has been clarified that the reporting has to be done by the entity on a standalone basis, and consolidated basis can also be done, which form for those entities which publish consolidated financial statements. Anything from your side, Rajendra ji, on this one?
No, I just wanted to make one call out. I think all fine, but on the comply or explain basis. So I know just to clarify, I'm sure most folks on the call are aware of this. But when you say comply or explain it, either you're complied, in which means you're good to go. But when you're explaining the requirement again under LODR and what the way SEBI looks at it in terms of its, the other notifications, circulars, and regulations that SEBI has come up with, is you need to explain why a particular indicator or particular compliance was not done, and then you also have to put in that explanation what is your route to ensure and the timeline to ensure that the compliance actually happens. So, when you're seeing comply or explain it, it doesn't really actually let you off the hook. Actually, it would be better off to comply than to get into a comply or explain modality. Other than that, I
Yes.
think fairly covered. So no additional added comments from me.
Yeah, I think we can move on to the next slide, please. Yeah, now these are the details which are required to be reported under Section C of the BRSR. See, there are 9 principles. 3 of those principles we can see in this particular slide. Principle number 1 is that the company should conduct business with integrity and in a manner which is ethical, transparent, and accountable. So integrity, ethics, transparency, and accountability are the 4 pillars of principle 1. Principle 2 is that the goods or services that the company provides, it should be provided in a manner which is sustainable and safe in nature, right? So sustainability is the one important pillar which has been covered over here. The third important pillar is employee well-being. Herein, not only of the reporting entity, but also of the value chain partners. The principle covers employee well-being of the reporting entity plus value chain partners herein. So we'll look at the rest of the principles in the next slides, elaborating on principle 1, which is integrity, ethical, transparent, and accountable conduct of the business. So we have to report various parameters here. The key matrices are uh, give me a moment, please. Yeah. So the first essential indicator or metrics which has to be reported is that whether there has been training and awareness programs on any of the principles. So here we have to report not only for the principle 1, but for entire 9 principles if there has been any training programs that has been conducted. Throughout the BRSR report, we will see reference to various training programs that it has emphasized on. I think government very clearly understands that now we are in a stage wherein this is an awareness stage. So awareness and reporting goes simultaneously. So government has laid a lot of emphasis on that the companies, listed companies create awareness about it, not only within the internal stakeholders, but with the external stakeholders also. So the reporting requirement as of now is limited to board of directors, key managerial persons, employees, and workers of the company. We have to report the total number of trainings that has been done and the topics that has been covered and the percentage of people who have been covered through these trainings. So this is the first matrix that we have. The second, elaborating one small point on the first matrix, one is on the first essential indicator. So matrix and essential indicator we can use interchangeably. The statutory word is essential indicator. Is that throughout the report, once again, you will find reference to employee and worker. So employee and worker, there is a subtle difference. We can look at the latest labor codes, which prescribes the definition of employee separately and worker separately. So largely the conclusion of those definition is the employee who work for wages, who are classified as employees by the company, and who are largely skilled workers, work in offices. Workers are those who work for hire or reward, and they are largely unskilled, manual labor. Though skilled can also be covered if they fulfill the condition of being working for hire or reward. And these workers are largely into industry and factories. So in layman times, we can say that employees, the white collar workforce and blue collar workforce can be classified as workers. So throughout the report, the reporting requirement says we have to report the essential indicators separately for employees and workers, because I am sure the regulator very clearly understands that some things can be easier implemented with employees, but it can be a bit challenging in implementation, awareness creation with the workers. So separately, it has to be displayed. One particular a company can be very good in implementing and creating trainings and awareness with the employees, but it cannot be very as good as in creating same kind of awareness or trainings in workers. So that has to be clearly brought up. So in under the principle one, next key essential indicator is the fines, penalties, punishments, award, compounding fees, settlement amount. Please, I am reading out right from the regulation. These are the words used and these have to be reported here. And only the material uh, fines and penalties has to be reported. So while there is a debate going on within the industry as to what can be the scope of reporting of fines and penalties, both under SEBI LODR and whatever is reported under SEBI LODR, that can be compiled and can be reported herein as well. So we have to be very careful and understanding about this particular fact is that only material fines penalties and the scope of reporting in BRSR is little larger because the compounding fees, which may not be a penalty, or the settlement amount, which cannot be a fine or penalty, they also need to be reported over here. So just to distinguish between the two, any compounding fee or settlement amount, if entity wise there are materiality threshold, that may not be a material uh, under SEBI LODR because only fines and penalties are covered over there. So these two may not be reported under SEBI LODR, but these two, compounding fees and settle amount, they have to be compiled and reported at the year end in the BRSR report. And we have to report only the material compounding fees and settlement amounts. Another essential indicator is that if there has been any appeal or revision that the company has preferred against any order issued by the regulator or law enforcement agency or judicial institutions, then those also have to be separately brought out in the report. Company needs to disclose whether there are anti-corruption or anti-bribery policy within the company or not. And from my experience in working with industry, I can say that making a policy can be a lot easier, but getting this implemented throughout the company and see, generally bribery and anti-corruption happens not only intra-company but within inter-company transactions also, with transaction with customers and suppliers also. So putting out one way of implementing from legal perspective, from compliance perspective, from my portfolio perspective is that we put it out in the contracts with respective stakeholders also. So that action has to be taken. And sometimes your value chain partners or customers, suppliers may not be very adept in understanding as to how to get this implemented. So any corrupt practices or bribery related acts which company is not required to do, the customers and suppliers are also not supposed to do on behalf of the company, consultants or anybody associated with the company. So getting this implemented is also a task in itself, what I can in nutshell say from my experience. Then we have to also disclose disciplinary action that has been taken by any law enforcement agencies against the directors, KMPs, employees and workers. Again, the scope in BRSR is little wider than the SEBI LODR, is that the employees and workers are also covered over here. And I will presume that this fines and penalties, disciplinary action will relate to the business of the company. Suppose any employee or worker, he has been uh, fined, or if there has been any disciplinary action taken against that particular person in his individual capacity, which has nothing to do nothing to do with the company or operations of the company or to his employment towards the company, then that may not be required to be disclosed here. That is my personal view. And we have to also report that if there has been any complaints regarding conflict of interest that the directors may have with respect to the company or with respect to their roles, and also the corrective actions taken by the company on such complaints. So a reporting requirement is one. Taking it back to back, we'll have to create a mechanism. There is a system and process by which uh, such complaints can be made by any of the stakeholders to the company. So we have to first create that process, and then at the end of the year, at the time of preparing this report, that data will flow from that particular process. So a couple of leadership indicators in this particular principle is that training programs or awareness programs that the company has conducted for its value chain partners has to be uh, reported here. The number of trainings, the topic of those trainings has to be reported over here. So as I had stated in the start of my session, that value chain partners, they have uh, the listed entity have an obligation in reporting about value chain partners. This is one example wherein it is forming part of a leadership indicator, which is voluntary in nature. And mostly you will find that the disclosure related to value chain partners are in the nature that the listed entity is creating awareness among the value chain partners.
So in fact,
I
Vivek,
mean,
I want to add one thing, I would say over last 10, 15 years, when I've,
mhm,
in fact, when I was employed with one of the global leaders, and when we work with many clients, see one common thing which we have, noticed in them, even in I'm thinking 15 years back, also 20 years back, I'm saying, then they have a mandatory training for all their employees, specifically people who are, client for facing or market facing. In terms of their anti-bribery, anti-corruption, to help them understand what they can't do, in terms of even putting their controls on how much they can spend on on taking some client on lunch or giving them a gift,
if
what is allowed,
policy.
what's not allowed. And then very robust training programs, in terms, these are and whenever any employee is getting onboarded, the training programs are there. They're documented, there are videos available, there are, they're tracking all this, who's attending those people. I think and if you look back, compare that with in India, even the largest organizations do not have that, have never invested in creating such robust training programs or, or awareness initiatives. I think with this BRSR principle coming in place, I think we would possibly see more of these coming in Indian organizations as well. But I think the
Definitely.
templates, but I think the templates are all available in the market. It's not that we have to recreate the wheel. It is there. It is that is it. We have to understand and find the find it and start implementing in the organizations.
Yeah, Jayant, I think you just hit the nail on its head, and a very good an explanatory I would say from explanation from Vivek as well. So yes, I mean as it said even earlier, and I am fully I think everybody on the call will be aligned with this, that a lot of these things about conducting your business in a manner is fair, transparent, ethical, and do not engage into activities that are corrupt, or you are not influencing decisions in a manner which are favorable to you in whatever way. This has always been a part of the, the the ecosystem, the legal and the
Hmm.
regulatory that applies to any entity across. If it's agnostic to what business you are in, the size of your business, you're not supposed to do such. I mean, I'm talking specifically about the the anti-corruption and the bribery related stuff. In fact, if you look at the UK Anti-Bribery Act, it actually very clearly calls out that even if you are entertaining, and Vivek mentioned it, when you're entertaining a prospective client, you just need to be careful about where you're going about this. The question now here is, how are you actually going to go about and disclose this? I mean, while this was, let's say, part of your audit. It was something that the companies in which were required to do. You now under the BRSR mandate, you are required to come out and disclose it and say hand on heart by a very senior most, and we'll come to that as to who in the management is responsible. And then we're covering that part as well. uh, to and say to your stakeholders that we are not doing this at all. Training, yes, absolutely. It is something which gets carried on, and in earlier engaged with companies where we set out a process in consultation with the HR and other functional heads, saying that an onboarded employee does not even get his email ID or his employee ID till the time he in parallel is able to complete his mandatory training, whether it is Bosch, whether it is company's code of conduct of business and ethics, and then there are periodical review and training that happens. Again, uh, we also when we see that there is an engagement with the vendor needs to identify with whatever we are and have adopted as our policies, take time to go through those, and we are more than willing to offer training and awareness programs periodically to the vendor, because vendor outfits typically have a lot more attrition issues than maybe the company has, and you need to be mindful of the ever changing dynamic population that's subjected to training. And it's a good thing to look at refresher training. Again, there change in the
Right.
content of, and you need to keep on looking at those things going forward.
Right. Right. Yeah.
Yeah, so this principle I think is very very important and very core to the values of our day-to-day lifestyle. Conducting ourselves, our business with integrity is a huge challenge, because uh, when we conduct ourselves, it is only myself that I am controlling me I am controlling myself. Whereas in the business there are so many employees that you work with, so many external stakeholders that you work with, and maintaining a thorough line of integrity throughout this particular uh, is a multi-pronged approach that you have to take from the governance and legal standpoint. I said that in agreements I will include HR or trainings or any academy team that any company may have. They'll have to create training and awareness. The customer focused teams, business development, operations, they need to be aware of this on how to conduct, how to treat their potential customers and all. uh, Finance, the payables team, the finance team, accounts payable team, they need to create some kind of automation within the system that XYZ expenses, limit of expenses of reimbursement is not exceeded. So it's a multi-pronged approach, and you can find a footprint of integrity in each and every aspect of business that you do.
Right.
So with that, I move on to the next particular principle. I think we can remain on the previous slide. Principle number 2 is uh, businesses should provide goods and services in a manner that is sustainable and safe. So the essential indicators for this particular principle is that we have to disclose the percentage of R&D expenses, capex, that we do, that the company does, towards technologies that are key to improve the environmental and social impact of the goods and services that the company deals with. So just to take as an example, these ride hailing apps or food delivery apps, how much of their total capex or how much of their total R&D they are implementing into such kind of technologies which is making an impact on the environment and on the society, the social impact. Like food delivery apps that are popular in India, they say that the riders, the food delivery boys are not their employees. Theirs is a three-way marketplace where the restaurant, the uh, we as consumers, and the riders. There are the three pillars of their marketplace. And sometimes, we feel like the delivery boys are working in a condition which are not very ideal. So they have to uh, since the entire business is IT enabled, there are ITES, IT enabled services, they have to do some an R&D on how there can be a equal distribution of the deliveries, how the timeline for delivery for one particular rider uh, is reasonable and humane. So all those aspects they have to bring out. I'm just taking it as an example. Uh, Another is now everything is on e-commerce. So the e-commerce services, e-commerce companies, which are sometimes market aggregators, they uh, I wonder how they will spend on R&D expenses and capex, which will have an impact on the environment or social on the society. So things which respective industry needs to focus on and find its own domain. There has to be another disclosure on sustainable sourcing, what percentage of inputs we are sourcing from sustainable sources. Uh, what is the another metrics is how much of our products we safely reclaim, the industry safely reclaims for the purpose of reusing, for recycling, or for the purpose of end of life disposal. So mostly consumer goods and goods which consume high amount of plastics, they have been mandated by the environment protection laws. There has been a online mechanism which has been set up. uh, we will discuss about this in the next slide also. There has been a mechanism set up by Ministry of Environment and Climate Change, Ministry of Environment, Forest and Climate Change, which says that they can register online uh, for the purpose of the recycling, that the end of life recycling they do. They can report it therein. So all those things have to be disclosed in the second pillar of BRSR report. There is also a concept of extended producer responsibility. So this is what I was talking about. Producers, importers, and brand owners, which are called PIBO, they are made responsible to collect the plastic packaging waste for the purpose of recycling. So uh, for example, we buy any electronics, we buy a TV for our home, it comes heavily packed under under various kinds of plastics, from bubble wrap to more complicated form of plastics. So they are under an obligation to reclaim those plastic and put it to reuse, put it for recycling, and if it cannot be, then a safe disposal of those plastics. So that has to be reported here as a part of extended producer responsibility. Applicable, may be applicable only on, not on all the entities, but on the select listed entities. The leadership indicators under this pillar are there can be a life cycle assessment of the product and services. For example, this is very apt for the electronic industry, all smartphone manufacturers, television and other gadget manufacturers. They have to kind of get a study done. This is again a voluntary as of now, of the life cycle assessment of their products. And there is also a provision of life cycle assessment of services. Again, it has to be seen, and each service industry has to find its own domain of what life cycle they can, life cycle assessment they can do for the services that they render. For example, I take a service of insurance service provider, right? Insurance broker. We have online insurance broker, stock market broker. What can be their product life cycle assessment for the services they provide? It's an intriguing question. Maybe the industry expert from these domains can put up on the chat. There is also a leadership indicator on the significant social and environmental concerns or the risk that has arisen from the production or disposal of the products that the company manufactures, and the action that the company has taken to mitigate those. So social or environmental concerns, I again deal with examples. For example, a listed entity into power sector. So there are several byproducts to the power production, and those have a significant impact upon their disposal. So what is the impact and how those are mitigated are important disclosures over here. Move on to the principle number 3. Principle number 3 is well-being of all the employees. So herein important indicators have been given, and this is a good indicator for the industry as to what the government expectation is towards what steps a company can take and should be taking for the well-being of their employee. Health insurance, accident insurance, maternity benefits, paternity benefits, daycare facilities, these all have to be disclosed as to what measures the company has taken, how many percentage of employees and workers, permanent employees, other than permanent employees and workers, they are covered within these insurance policies. Life insurance is a part of voluntary disclosure under a leadership indicator disclosure. But health insurance and accident insurance and maternity paternity benefits are part of essential indicators, and minded that essential indicators also needs to be independently assured. So these are real benefits that the employee are going to reap from such disclosures. Retirement benefits like PF, ESI, gratuity, and NPS is also there, but it is not specifically mentioned in the report. But seeing the popularity of NPS, I think under the head any other, most of the companies would be reporting the NPS also, and the percentage of employees, those have been covered through these retirement benefits given by the employer to the employee. Now, accessibility. Next disclosure on this particular principle is accessibility to the differently abled employees. Right. So there has to be equal opportunity policy, which should cover which should cover the rights and the privileges that has been given to a person with disabilities. The access to office, access to the work premises, whether it is factory or industry, that has been given to that differently abled person. And next particular disclosure is employee who avail maternity or paternity benefits. The company needs to disclose what is the percentage of retention of such employees. What is the percentage of these employees coming back to work? Employee and workers coming back to work. Very, very important indicator, because we all know as a fact that maternity leaves, though ensured under various laws in India, paternity as well, lately it has come into place, but it is not seen very favorably by the employers. And these are some indicators wherein it will kind of put focus on and retaining these employees who avail these leaves. There's we should also next indicator is that there should be a mechanism to receive and redress grievances of the employees. So a dedicated channel has to be created wherein the employees can put up their grievances. These grievances can be of sundry nature. There are several other laws which mandates the companies to create a channel for grievance to submit grievances. One such law is Prevention of Sexual Harassment at Workplace Act. So POSH, under POSH laws, a separate channel has to be created. Internal complaints committee have to be formed. Under whistleblower mechanism that is there. So we have to create a mechanism wherein whistleblower complaints can be put in. Plus, this is an additional channel, a formal additional channel that we have to create, wherein grievances which are not in the nature of whistleblower or not in nature of POSH sexual harassment can be reported, and the company needs to report such grievance which has been lodged by permanent workers and by other than permanent workers, employees and permanent employees under 4 different categories. So as of now, only whether there is a mechanism or not, yes or no answer is there. I'm sure going forward, how many complaints have been lodged and percentage of redressal also will come in gradually. Another indicator is that the association or unions wherein the employees are members, they have to be reported. Training given to employees on topics like health and safety measures, skill upgradation, that has to be reported. Performance and career development reviews. Many in organizations you will find that there is no formal process. There is no even if there is a formal process, there is no actual process wherein performance reviews are done. It is done basis the perception and basis random decisions. And formal process for career development and performance has to be reported. Health and safety management system, whether there is answer in yes or no has to be given, whether there is occupational health and safety management system, whether there are work related hazards, these all has to be reported. The safety related incidents have to be reported. So total man hours has to be calculated of the company per million man hours. What is the percentage of lost man hours has to be reported. So very important for industry like airports where I used to work earlier, and where these concepts were followed that time also. Work-related injuries, fatalities have to be reported. High consequences, work-related ill health. Like there are certain industries which are which operate at very high decibels. Airport being one. Uh, Iron and steel manufacturing industry being another example. So therein severe high consequence work-related ill health is associated with such professions. So these also have to be reported as to how many workers are affected. Uh, Measures taken by the company to ensure health and safety at the workplace, the complaints that the employees have made towards the working conditions, towards the health and safety concerns, have to be number of complaints have to be reported. And there are then essential indicators wherein again I had mentioned life insurance, whether the company has taken for its employees or not. For the value chain partners, there is a mechanism wherein we can measure whether the value chain partners have collected and correctly deposited the statutory dues of the employees of the value chain partners. So that brings us to the closure of principle 3. We can move on to the next slide, which is principle number 4.
So yeah, I just
Yeah.
want to add. I just want to add one thing. Going back to the principle number 3. While it sounds very the way it's drafted, I would say I look at it. I say this is all my statutory obligations. Is there part of it, some other law? There is a PF law. There is an ESIC law. There is a minimum wages act. There is a maternity act. It all falls a part of the compliances. But I think there is one very important aspect to understand, and I urge anyone listening to this, that one has to understand the one point, which is skill upgradation and training. See, let's understand, and I think this is one debatable thing which is going on the LinkedIn when Mr. Narayan Murthy also said that India should increase the productivity and we should be ready to spend 70 hours. It's not just about being able to spend 70 hours, but also able to spend our time effectively. Now, look at it, if I say when I started my career, 22 years ago, until today, the way we used to work and the way I, work today is very, very different. It's very, very different. Maybe that time getting a desktop was a luxury. That if you had that desktop allotted to you, which is you are some serious senior guy in the company. And today, maybe my security guard also will have a laptop to carry with them. So I think the way things have changed a lot. If our folks are not changing, if they are not getting trained, and this is going to be changing for another 10 years. I think the way we work is going to completely change in the next 10 years, 15 years, the way the technology is moving. We have to retrain, upgrade the skills so that we can be more productive, not just from an organization perspective, but also from our social responsibility perspective, that my employee who's working with me should be able to work for a longer period. if this person is 50 years today or 55 years today and is not able to adapt to the newer working condition, maybe after 5 years he will become redundant. I want him to work, been able to work for longer. I'm saying, look at the Western countries. People are productive till the age of 70, 75. Here, somebody reaches 55 and say, okay, oh, now you're redundant. We don't need you anymore. I think this is one very important aspect we'll have to understand from our conscience and our, I would say, sustainability, our ethics perspective, that we have to make people who are working with us be able to remain productive for a longer period. I think
Absolutely.
this one needs a lot of change in our thought process, in the way we look at it, because we look at it today, we hire people for what they are today. I said, you're trained, okay, I hire you. You're not for the next one, okay, I'll fire you. I'll hire a new one. That is not sustainable, because society, if it is not prepared, we cannot sustain for long. No business can sustain. Yeah,
I think it's a very large social issue. While India has that advantage at the macro level, India has that advantage that we have a very young population. But population which are senior, 55 to 75 years of age, making best use of such human resource, such indispensable experience, which we need to find ways to channelize this experience to the best use of the individual, of the entity, of the country.
right.
Yeah, I mean, fully aligned on that, Jayant and Vivek. I think broadly what the ESG is driving through, as a through a aegis of a regulation under SEBI, mandating it for listed entities, which obviously have, the stakes. The stakeholders are different, more varied, and you have investors, shareholders, even at a retail level, who are invested, and therefore they have a wider base in terms of stakeholders to who they are responsible to, in addition to their employees and everybody. And because they have, like, money taken in from the investors, they are logically also considered responsible to ensure that you are conducting the business from the monies that you have and the confidence that you have from the markets in a manner which gives back to the society in an equal measure, if not more, on a continual basis, in a manner that it creates a environment of sustainability for both you as the corporate operating in this ecosystem, and also those who are contributing to your growth and who have contributed to your growth all this time. So unless this cyclically works, in continual basis, it's not going to happen. And therefore, and as I said earlier in the last webinar, in India, we look have a a compliance approach to almost everything. So unless sadly you have a gun put to your head, you're not actually set up and look at stuff in which way you should be doing. I'm not saying not all companies do it. Most companies do it, but now you are, the disclosure aspect is something which is getting companies more into, more minutely looking at a granular level as to how this is actually implemented on an ongoing basis, by HR functions, by legal regulatory compliance functions, even your business functions, operation functions, as to how they are exactly going about doing everything here. So I'm fully aligned with this conversation. Thanks.
Yeah, I was just, while you were talking, I was just doing some number search. The year I was born, Indian population was less than 70 crore. Uh, in 1980, the Indian population was less than 70 crore. In 1970, Indian population was 55.7 crores. 15 crore people were born in that 10 years. And today we are from 1970 or 80 to till today, 43 years from now. From then we are more than doubled up. Sustenance is going to be a challenge at this rate. Okay, and people who were born in 70s and people who were born in 80s, they are required. We just can't be focusing on the population which is born after in 90s. We have to focus on the population born in 70s, 80s, and 60s also. This is important as well, because otherwise sustainability is going to be major challenge. We are not yet a developed economy. We don't have that luxury of so much of resources in hand. I think that's important aspect to be looked at as well.
Absolutely. I think sustainability is the key word. If we have to move forward, if we have to give better world to our next generation. Then sustainability, recycling, in being environment friendly, being mindful of the climate change. These are the key things that we
Wow.
have to have in mind.
Yeah. Great. So let's move next. Vic, we are at 12:10.
Yeah.
So yeah.
So the next principles would be quicker. Uh, so the principle number 4 that we have is that company needs to identify all its key stakeholders. There can be internal and external stakeholders. Internal stakeholders can be the investors and shareholders of the company, employee and workers, the directors of the company. External stakeholders can be customers, suppliers, the communities around the work premises. If it is a factory, around the factory, around the industry, if it's office, around the office, and the community on which the company is dependent, the employee of the company are dependent. These must be our stakeholders. The government, trade association, industry bodies that the company is member of, bankers, lenders, financiers in any form. So these category of key stakeholders the company needs to identify and disclose. The frequency of engagement with them has to be disclosed, whether any of these stakeholders are vulnerable, marginalized, and that has to be disclosed. What is the communication channel of communication with them, frequency of engagement, purpose and scope of engagement has to be disclosed. And there are leadership indicators like consultation between stakeholders and the board on the economic, environmental, and social impact of the company with these stakeholders and vice versa. Principle number 5 is respect and promote human rights. Very important principle which has been brought into business thinking. So largely such kind of things ideally get the last seat in business thinking and business decision making process. But such disclosures may put the company into introspection, the management into introspection. The training on human rights related issues and policies that the company has given has to be covered from employees and workers perspectives, no male female here, employee and worker related. Minimum wage pay, whether there has been minimum wage paid to the employees and worker or not, remuneration and salary that has been paid, median remuneration and salary that we pay to the board of directors, to the key manager persons, to the employees, and to the workers separately for each category of persons. This will bring out very clearly if any particular category is unreasonably highly paid or unreasonably lowly paid. So this will clearly bring out the difference in compensation of various categories. Uh, the company needs to appoint an individual or a committee of individuals who will be responsible for addressing any human rights related impacts or issues. So and again, one important to do's for the company is to upfront identify such particular authority and make this information public information, at least internally. Redress, the company has to set up mechanism which will redress grievances related to human rights issues. The number of complaints that the company has received must have to be disclosed related to sexual harassment, discrimination at workplace, discrimination related to any sex, creed, caste, anything. If there is child labor involved, is there any forced labor or involuntary labor? So these are the recent buzzwords that we have got to hear: forced labor or involuntary labor. Involuntary labor would be that you get a payment, but the hours of work are unreasonable, but the payment is unreasonable. Your attendance is not recorded. If there are overtime work put in, those are not compensated. So all these issues have to be this will bring out to the fore. And I think right point, right things will get ignited, people will get into thinking mode, and somewhere or other it will start a process of change. uh, there has to be mechanism for adverse consequence to the complainant, to the person who is reporting such human right issues. So though they need to be protected also. So what mechanism the company has adopted for their protection? Whether the human rights related uh, agreements, business agreements and contracts, whether they contain human rights related affirmations, assurances, both ways from either of the parties. Again, to do's from legal and compliance perspective, one of the to do's we can carry for ourselves. Then there has to be assessment at every year whether these uh, uh, each facility wise there has to be assessment whether human right issues have been reported in any of the facilities. Leadership indicator in this particular human right related things are if there any business process related change or modification that is required and whether that change has been taken up by the company. This can be disclosed as an upfront proactive measure that the company has taken towards better human rights. Moving on to the clause number, principle number 6, which is environment principle. So businesses need to protect and restore the environment. So the word, the special focus on protect and restore is there. So the total energy consumption that is done in the company, total electricity, fuel, or any other fuel that has been consumed. Then there is a new concept that has come in: energy intensity per rupee of turnover. That has to be calculated. So, which literally means like total energy consumption divided by the turnover in rupees. So every rupee that a company generates by way of turnover, how much energy it is consuming for that generation has to be reported. For service industries, I'm sure this will lead to certain uh, precedent and standards getting set out. For industries, certain precedents and standards will get set out. For example, somebody in the process of BPO. So now somebody reports like 5 kilowatt for every lakh of rupees. Uh, that can be a reasonable. Industry will get into a comparison mode, into a competitive mode with each other. The assurers will take cognizance of such facts. Uh, Again, there are under Consumption Conservation Act, under Energy Conservation Act 2001, Bureau of Energy Efficiency (BEE) have classified certain energy intensive industries like thermal power plant, textile, cement, aluminium, iron and steel. These energy intensive industry, they have been given norms and standards for conservation of energy. So they have to follow those norms, conserve energy, and if they conserve energy beyond the target, they get a certificate from the BEE, and this certificate is tradable. So this has to also be reported if any such trade has happened. Disclosure related to water, similar to what we just got understood about energy intensity per rupee of turnover, same water intensity per rupee of turnover has to be calculated. How much water you have consumed. So sources of withdrawal of such water has to be disclosed, whether it is groundwater, surface water, underground water, third-party water, sea water, desalinated water. Under every category, mind it, the requirement seems very easy upfront, but calculating back to back as to from where I have drawn this water is going to be a huge challenge. Again, assurers need to play a very important role here.
Yeah, so one comment here. I think these are some of these metrics and the granularity at which they need to come out in an annual report as part of your BRSR going forward. It actually is an eye opener. Like if I'm part of a team and you would be, as leading the compliance, because we completely own the governance area as well, and of anything that goes out into the public domain is we have an oversight. Is you look at the numbers and you do not really initially know, as I think Jayant also mentioned, is like what is good. I mean, is it when you're saying that you are, your water usage is at uh, respect to every rupee of turnover, or energy utilization every rupee of turnover is so and so. Is that good, bad, ugly? You have no idea. I mean, unless you start and go about making a comparative analysis as to an entity based in a particular location as using has a more efficient use, or maybe, and you are not then comparable there. I mean, I think this data will start coming up going forward, maybe in the next 3, 5, 10 years, and then it will actually be a field where you are able to identify as to which entity is, in terms of core metrics, is good and strong on its compliances, and which can be more, an entity in which more sustainable business action activities and operations are carried out. Yeah.
Totally agree with you, Rajendra ji, on that particular point. So in addition to water consumption, the air emissions uh, have to also be disclosed. How much NOx the company has emitted, SOx, particulate matters, persistent organic pollutants, volatile organic compounds, hazardous air pollutants, and then greenhouse gas emission under scope 1 and scope 2 emissions. These are various, uh, the, the emissions have been classified into with the with respect to the damage they bring out to the environment. They have been classified into scope 1 and scope 2, and these have to be separately measured. Like for example, a transport company, if operating vehicles, uh, a ride hailing company, they will have to bring out the emissions from their vehicles, classify into scope 1 and scope 2. From my industry experience, I know there are specific organizations which are expert into measuring these things. Basically, uh, each vehicle has the vehicle manufacturer has to disclose as to what is the emission that those vehicles make and in what proportion. Basis that, depending upon the mileage of the vehicle, these things are calculated, and the calculation can be recalibrated with the help of devices, measuring devices. Suppose a vehicle is 5 year old, it may not be emitting the same set of gases which were there at the time of manufacturer and at the time of purchase. 5 year down the line, there can be different set of gases. Maybe they are emitting scope 2 emissions higher than scope 1 emissions. So those all calculations have to be done. Preparation companies need to get prepared about it back to back, uh, and create uh, enough data for it, create measuring mechanisms for it back to back from the day one, and not wait for the day of reporting to have something in place. Uh, any project related reducing greenhouse emissions that we have, that the company is under. Suppose a company has undertaken a specific project and a specific greenhouse emission reduction project has been taken up, that can be disclosed. Waste management, how the waste is collected, what is the bifurcation of the waste collected, whether plastic waste, e-waste, biomedical waste. These also have to be disclosed in metric tons. Very specialized activity. There are agencies in the market operating which tend to specialize into measuring this and providing you with a certificate that this has been the waste collected. Uh, the environment impact assessment. There are notification issued by the Ministry of Environment, Forest and Climate Change, uh, prescribing industries and specific entities wherein they have to do environmental impact assessment. So they have to quote the specific notification number. They have to bring out as to what is the result of the assessment and what is the impact of that assessment. So these all things need disclosure. Any complaints that the company has received in terms of any environmental law not being complied have to be also reported. Leadership indicators herein are breakup of total energy consumed in terms of renewable and non-renewable sources, breakup of water discharged uh, before treatment, without treatment, and to what sources they have been, to what points they have been discharged, whether it is surface water that they have discharged or to groundwater or to any third party that they have given it. So these all things are under leadership indicators which has to be uh, disclosed. We were speaking about emissions. Scope 1 and Scope 2 are under essential indicators, and Scope 3 emissions, its intensity have to be disclosed as a voluntary disclosure. These are leadership indicators. If any company is under ecologically sensitive area, what is the impact they have on those environment areas have to be measured and put out. Again, for value chain partners, whether such value chain partners uh, there is any adverse impact on the environment out of their operation has to be disclosed, and whether the value chain partner have undergone any environmental impact assessment, that also can be disclosed as a leadership indicator, voluntary. The seventh principle that we have is uh, business when engaging in influencing public and regulatory policy. When the companies do policy advocacy, they need to do in a responsible and transparent manner. So it is a fact of the business that somewhere or others, every entity engages into policy advocacy, which may be favorable to them or to the industry. So it has to be, can be done definitely, but please do it in a responsible and a transparent manner, one which can be displayed openly. So any affiliation with the trade bodies, industry associations has to be disclosed. The top 10 trade bodies for which the company is a member has to be provided a detail of. And as a leadership indicator, what is the stand that the company has taken in terms of policy advocacy for any particular point, that can be disclosed. Principle 8 that we see is inclusive growth and equitable development. So this is a social impact assessment that the social impact assessment that is prescribed under this particular principle. The core elements and essential indicators are similar to environmental impact assessment. There can be prescriptions about social impact assessment. In one of my previous assignments that I was working with, it was an airport. The airport operator had to do a social impact assessment as to what is the impact of expansion and modernization of the airport on the society as a whole. So right from creating a plethora of job opportunities to positively impacting the rehabilitated and resettled communities, everything has to be brought out here. Rehabilitated R&R programs, what it is referred to as, largely it impacts the infrastructure sector. So then another disclosure point here is that if there is any grievance of the community, how those are addressed, what is the mechanism set in place for addressing those grievances. Leadership indicators here are how to mitigate any negative social impact. So in social impact, generally people tend to measure the positive ones. There can be negative ones as well. How to mitigate that can be disclosed upfront. The last principle under this responsible conduct of business is that the company should deal with its consumers in a responsible manner, provide good value to the consumers. So there should be a mechanism to receive and respond to consumer complaints. The turnover of product and services that carry information, like in the packaging, we may see nowadays many products packaging, they have an information about what is the environmental and social parameters that is affecting this product. Like you buy one product, we plant a tree. Like this product is sourced from marginalized communities. There's a particular edible achar or papad is sourced from Tihar jail. So all these things are can be disclosed over here. Uh, also, what is the safe and responsible usage of the products and recycling? How to recycle or safely dispose the product. In many electronic products, you will find this as a standard paper found inside the. We generally tend to overlook those small papers and font rights, but these are important disclosures from the perspective of responsible business conduct towards consumers.
So
The consumer complaints.
Vivek, just one point there is, it also asks companies to clearly call out if you're going over and above beyond what is mandated by regulation. So if you are really in the interest of consumers providing additional information, so that also I think you just covered it, but I just wanted to stress it. So the intent here again is to see
Right.
that how you are doing it more in spirit and less in letter. It's not just a tick off, right? Okay, I have seen what is mandated by law under legal methodology, for example, or under the DA is something you cannot do away with. You would have to, because if you are, facing a prosecution or a notice or a fine or whatever from the regulator. But are you going beyond that and providing additional information for the benefit of your consumers? That also is actually called out as a clear line item in this. Yeah, please continue.
Absolutely. Uh, So the next essential indicator is that the consumer complaints that have been received, the count of those complaints towards data privacy, advertising related issues, cyber security. These have to be a restricted practice if there is any complaint on such thing. There are serious complaints that have to be disclosed, not in terms of the qualitative complaints that the company has received, but the quantitative number of complaints that has been received and which are pending for resolution. Uh, with rapid evolution of technology, we have seen that there have been multiple product recalls, whether they are voluntary or they're through forced through regulation or in any direction by any regulatory authority. These have to be disclosed. Now, cybersecurity has been one very important aspect of disclosure, both under SEBI listing obligation disclosure requirement and herein also. The framework or the policy that the company has on cybersecurity and risk related to data privacy, and this framework needs to be disclosed over here. Am I audible?
Yeah, Vivek, you are.
Okay. So I think that brings me to the end of all the 9 principles and their respective core elements and the indicators that these principles have been rightly implemented and operationalized within the organization.
So in fact, Vivek, I just
So-
want to, I just want to add a couple of data points here for everyone. See, if I and when I was listening to, I was also trying to absorb it and look at how this would impact the larger businesses. I think with these principles coming in place, and slowly it will be and correct me if my understanding is wrong. While today it may be restricted to a certain size and scale of companies, but this list is going to increase. And maybe once we are, the SEBI is able to successfully implement it in 1,000 companies, maybe it would go beyond this scope as well. It would go to others as well. But I think one very important aspect which is coming out is the is that the business at every level have to start thinking very differently. It is not just about a reporting. It's I can't say because if I what I would say the company secretaries or compliance officer job is to just look at reporting what is there, but you have to now go deeper into aspect and engage, involve different stakeholders within the organization. Whether you're coming from a marketing perspective, you talk about advertisement, you talked about data protection, your IT policy processes have to be in place. Employees are important. Your business operations, where what material, raw material I'm sourcing, how I'm disposing, how we are being more, environment friendly or sustainable from that perspective. What from a anti-bribery, antitrust perspective, what I'm doing. So my sales folks are getting involved. My marketing folks are getting involved. I think these 9 principles just do not restrict to the compliance officer and the company secretary. I think it cuts across every function of the organization, every function of the organization. And I think of all this is in these organizations where this, this reporting will become mandatory now.
Absolutely. See, my perspective is BRSR report is a bridge, and on the either side of bridge there is a whole new world. So on one side, prior to reporting, there is a lot of introspection that the companies need to do, the businesses need to do in terms of planning the report. Uh, the far-reaching impact of the report is that you have to implement several things within the organization. You have to correct various things within the organization, because this data is, businesses will have now that thing in mind that this data is going public. If my gender diversity is poor, somewhere it will put the ball rolling, the thinking ball into rolling as to how to increase my gender diversity. If there is a discrepancy in terms of remuneration, median remuneration of worker, employees, KMPs, and board, then somewhere again it will set the thinking ball into rolling, how to bridge this gap. And in the endeavor to put out a positive report, a good impact report, people will start doing things internally. And once the report is out, this will be reported to the regulatory bodies in XBRL mode. Now, just imagine the power of statutory authorities, where they have the unlimited power to consolidate, derive data, make segregations. This is the 1,000 listed entities which will make this BRSR report public.
Yeah.
So
Yeah.
these will be virtually an industry indicator, and the government can take a lot of clue into where to focus on in terms of policy making, where to put focus in terms of keeping a vigilant eye on implementation of statutory points, and keep very social impact, environmental impact, all these things. Now, like when whistleblower came in, the common man got a tool in his hand to make his voice heard. There are several channels of communication that has been asked to be reported in BRSR. So it will open up several channels for the common man, for the common general stakeholder to make their voices heard.
Yeah.
At least not qualitatively, but at quantitative wise, they'll be heard.
Yes.
Yeah,
Yes.
I think this, even when we're talking about the waste management processes that a company is adopting and how it will continue to conduct its business in or business operations in a sustainable manner, the single-use plastic banning, and but that is something which also is relevant here. And the interesting point, Vivek, that you bring out about the sheer amount of data information that these reports are now providing to the government. If you look at the CBAM related, standoff in a way which was currently in the reporting and disclosure modality as far as the European, carbon issues are concerned, and they're asking companies to disclose and then putting a tax in a way to balance them with what are the implications of the higher level of standards adopted by the EU. So these dialogues will get more hardcore data from this report because corporate entities significantly are the biggest consumers and leave the largest carbon footprint sheerly because they are conducting businesses and consuming more energy, more resources, than obviously individuals or even group of individuals. And individuals again, independently would be doing the same. So go to Jayant's point earlier, a 1.4 billion population will definitely be consuming a lot more resources than, but corporates, by providing or creating products and services to be provided for these individuals, are obviously in a much, a higher consumption pattern than anybody else in regard to the resources that are there. And mindful consumption ensuring that they continue to be available in a cyclical manner is absolutely essential. Otherwise, you will not have a market to where you will actually be selling products and providing services to.
Yeah.
So mindful of the time and coming back to this particular slide on display, I think the various points under principles that we went through, these are some very key highlights of those reporting matrices, like greenhouse gas footprint, embracing circularity, details related to waste management by the entity has to be put into place, energy footprint, water footprint has to be, gender diversity, fairness and engaging with customers and suppliers, employee well-being, and the openness of business, because several places there has to be a communication channel. So how open a business is, these all have to be reported under various principles, under various essential indicators, and there has to be an assurance also on what we report. So these are the key things that will come forward when we see 1,000 listed companies, top listed companies reporting this in the coming years.
Yes.
Next slide, please. Yeah, so to quickly touch upon value chain partners, value chain, as we had discussed briefly at the start of the session, that 75% purchase or sales by whomsoever a listed entity does will become your value chain partners. Upfront to do is to identify such value chain partners. And under various reporting matrices, we have seen that we have to give out the details of the value chain partners. Uh, there are various management policies, whether they have adopted those policies, complaints or grievances under the 9 principles, where they have set mechanism of receiving and redressing those complaints and grievances, what the listed entity has done in terms of creating awareness among the value chain partners. So they become kind of indirect reportees through the listed entities. I think very important coverage that the government has tried to do over here. So awareness to such value chain partners, as we had discussed initially in our session, is very important. Engaging with them, making them aware, what data we'll ask from them, to start implementing those processes, mechanism, so that such data can be given at the end of the year. I think very important engagement that the listed entities need to do with their value chain partners.
Vivek, what is upstream and downstream value chain?
Yeah, upstream would be like if I am I am selling my product or services. So the recipients of my product or services would be upstream. So if any one particular recipient, my customer, avails 75% or more of my total sales, then that is my value chain partner. And
Okay.
downstream would be like my suppliers. So my supplier, if I have one particular supplier which is supplying more than 75%, we can take various industry examples, like in the online e-commerce aggregators. You would find that several business houses have set up separate legal entities who are the sellers, and the e-commerce player is the market service provider, is the platform provider. So for the platform provider, if they are listed, the value chain partner would be the seller on their platform.
Yeah, seller on the platform, again in some cases, then you would just have to go beyond just the 75% metric and see would not have one or two sellers who can contribute that number. And just to add, a supply chain basically referred only to the system and resources required to move a product. A value chain is just something which at every aspect of the way a good is or a product is manufactured, right from its initial stage, from a raw material to the time it comes to the final customer. Let's talk about a pack of biscuits. how does that entire, at every step there is a value addition, and therefore it's called as a value chain. So for every value that is added, how are you as an entity, how relevant that is, and how you are as an entity treating your value chain partner in each of these levels of adding value to the product or service that is being provided. So, and the disclosures have already been just called out by Vivek, so I will not delve on that again.
So just to deeply understand this. So I am a, let's say I'm an automotive manufacturer. So I have 200 OEMs which are providing different raw materials to me, from a screw to a steering to engine to other things. So what would comprise the 75% of it in terms of the total value of what I'm procuring? So let's say 50 of my partner or 200 will from the value perspective contribute to 75%. So these 50 will become a value chain partner. Is that correct understanding, Vivek?
So in my view, I think if one particular supplier is such that it is you are sourcing in terms of value, 75% of your components from that particular OEM, in case of your example of automobile manufacturer, then that one particular supplier would be your value chain partner. Suppose you have 4 or 5 suppliers for the some specific component in the engine, and all 4 or 5 of them put together uh, constitute the 75% in value of the total sourcing that you do. I don't think all 5 of them will become your value chain partner. I think here the idea of the regulator is to identify the backward and forward integrations that you have done, and backward and forward integration to a specific entity if you have done. So industry wise, I'm sure your components, a group will always be you'll always have a group which will supply 75% of your component. So taking the whole of the group is not, in my view, is the idea of the regulator here. Identifying a large supplier, large customer would be like, I know a listed entity which manufactures graphics which can be pasted on the automobiles, right? Like the car logo, the graphics on the two-wheelers that we have on the fuel tank, and that particular manufacturer is the largest supplier for a particular brand of two-wheelers. So virtually they are both of them for each other are indispensable. So while the manufacturing entity, the two-wheeler manufacturing entity is also listed, this particular graphics manufacturing company has also got itself recently listed, though it is mid cap or small cap. But it will have to evaluate from the perspective whether that particular brand of two-wheeler, they'll have to calculate their total supply, and if that particular two-wheeler manufacturer is consumer of 75% of their product. So if that particular two-wheeler manufacturer is value chain partner in terms for the manufacturer, for the graphics manufacturer, then graphics manufacturer will have an obligation of reporting about the two-wheeler manufacturer, though that is also listed. So I think there. Yes,
sorry, go ahead, Vivek. Yeah, I'll finish.
I'm done, sir. Your turn.
Yeah. So just one comment, to Jayant's question is, I think the wording used in the regulation, to my mind, and we can double click on that later, is cumulatively comprising 75% of its purchases sales by value. So to go to your question, let's say you have 50 suppliers of a particular raw material or a component of the product that you are ultimately manufacturing. Those of the 50, who in value are at 75% of what you totally need or what you totally have been procuring. So those that can be 4, 5, 10, 15, 20 as well, because typically when you have a product which is not that technologically advanced, you might want to spread your vendor base to so that you are able to get always better terms. But if it is something like Vivek just mentioned about a very a standalone, a very technologically high end item, then you have very limited vendors there, and obviously more than 75% at times may also come in from maybe one or two vendors at best, or you might want to create an additional bench strength there, or alternative by considering even import because you don't want to be subjected to let's say very tough or unfavorable terms in your contracts with a local vendor or an international vendor. It can always be used as well, but it is cumulatively comprising 75% of an entity's purchases and sales by value is the way we would look at it. So I hope I've answered your question.
Got it. Thank you. Thank you, Rajendra. Yeah, let's move next. Okay.
Yeah. I think we kind of looked at it, in some detail, as Vivek had mentioned, the implementation about improving the information visibility, data collection. Again, vendors are differentially challenged in the sense of resource allocation, depending on what business they are in and what is the size of their business, whether they're able to allocate the time and the resources, effort, even being able to understand what ESG stands for, and have a complete a granularity of the understanding that is matters to them is really a challenge. The orientation towards sustainability at a vendor level, really needs to be developed. I think one of the trainings or one of the awareness programs, as the essential indicators, leadership indicator actually called out, is how much you are spending time with your value chain partners in ensuring that they are able to see life in the same light as you are. Uh, your the supplier's commitment, lack of knowledge towards sustainability, as I called out, lack of IT integration in the value chain. These are typically, I think, the issues which will surface when you reach out to or try to drive down or drill down the ESG mandate across your value chain partners. But I think that this will again be an ongoing effort, and going forward as you move along, you'll definitely have a more aware of value chain partners also participating. Because as I called out right at the beginning of this webinar, is the government is not just sitting quiet looking at mandating the ESG through BRSR, through the SEBI regulation route. The company law committee is also considering to come up with a rigorous regulatory framework for unlisted companies of a certain size. So they will also have in some point in time to adhere to these requirements in one form or the other. Okay, sorry. About the assurance provider, this is more about the SEBI circular of, July 2023. The board of the listed entity is required to ensure that the assurance provider of the BRSR has the necessary expertise for understanding and taking reasonable assurance. And who should therefore, I mean, this basically is the core. I mean, it's not just sufficient for the company to say, these are my I mean, this is the mandate, these are my commitments, these are what I'm seeing as the essential indicator where I am, when this is where I am aspirationally on the leadership indicators. But they need to have a person who will actually go down and say that, okay, we are we reviewed this, and we think that what has been put up by this entity is in factually also correct. So that's where the assurance role of the assurance comes in. The listed entity is required to ensure there is no conflict of interest. I mean, when you're appointing an assurance provider and appointed for the BRSR core, for instance, It shall be ensured that the provider or associates do not sell its products or services to the entity. Then there is SEBI FAQs which came up, and where it calls out that an internal auditor. So SEBI is not mandating who can be, or they leaves it entirely to the entity. Internal auditor, obviously by the role that it carries, cannot be assurance provider, but the statutory auditor can be an assurance provider. So you have that list of activities that an AP can undertake without conflict, and the group and associate also has been explained in detail about in the FAQs. But basically, the internal auditor, no. Statutory auditor, yes, can be the assurance provider. There's a data and approach specified in the BRSR core format for providing the assurance. So I think that those are the things that I'd like to call out here.
So one thing which was given an strict qualification for assurance provider is not defined in SEBI, which means right now it is not very clear who could be an assurer, unlike maybe uh, any CA firm who would normally do an audit. Here it is not yet determined, or such list is available. Any such companies have come up with such offering such kind of end-to-end offerings yet?
So at the last webinar, Jayant, I think I had mentioned that CRISIL had come up with its step-down subsidiary, which was going to focus clearly on ESG. And there are a few, I think, equities there. That there are two, three other editing providers who are out there in the market. And I think this is going to be a very, I would say, demanding field, and a very I would say, not maybe lucrative is not the right word, but it's definitely an area where people would want to come up, because there the other challenge is not only about setting up a assurance or a rating provider's setup. It also needs to have an expertise, and given the fact that the BRSR and all of this, the journey in India is just about started, given the few years now, and there is still a timeline that goes on, as Vivek will walk us through in the next slide. But it is too early for us to have in-house or within the country the level of expertise that is required. Will develop over a period of time, but you can definitely see a fair amount of I think movement here. I mean, a lot of people coming in uh, as and providing expert guidance to companies on implementing BRSR and complying with their ESG obligations.
Okay, thank you.
Yeah, so coming on the timeline for applicability of various disclosures that we have. So the BRSR reporting has been already mandated to the top 1,000 listed companies by market value. BRSR Core plus reasonable assurance has been for the financial year 23-24. So the report that will go out in 2024. It is compulsory for the top 150 listed companies, top 150, top 250 for the FY 24-25. Then top 500, and then in 26-27 top 1000. So it is a very graded approach that the regulator has prescribed for the listed entities to take up about the BRSR code. Plus the value chain and limited assurance of the value chain, it is going to be for only top 250 companies from the financial year 24-25. So we are still 2 good years away, 2 calendar years, I would say. We are right now on 23, so it will be the reporting would be required in 25, and that too on comply or explain basis, and that it gets mandatory 3 years later. That is 25 for the financial year 25-26, and again for the limited value chain and limited assurance, this has been from 25 to 26 financial year. This has been mandated for top 250 companies on a comply on explain basis. So I think this time is needed by the industry to grasp up. This time is needed to make preparations of the implementation of the principles, of the adoption of the core elements of these principles, to operationalize the principles, to set mechanism and processes for these principles, and only then reporting follows. So I think sufficient time has been given and preparation starts today. During our discussion today, I think there were several points on which action needs to be taken right away by the proactive management of businesses.
So what it means, the ball is already rolling. There's no going back onto this. It's only going to get more and more stricter and more inclusive. I would say, wherein companies will have to start falling into it. It's not just about top 1,000 companies. I think it's about their value chain, which is maybe much larger. Audience, uh, they also need to be aware. They also need to start complying with these, or being aware of all this. Plus, I would say the way I also look at it, um, again, taking a global example, if I'm a value chain partner for a global brand, even if they are not using any of my company in India, I'm exporting all of them. I have to abide by a lot of their principles, not just the quality side, but how I'm treating my employees, or my my ethics side, where how am I procuring, what am I, where am I, uh, you know who are my directors, and those all the complete reporting has to happen on an annual basis to the larger organization. I think this is what is coming up in India too, and yeah.
Absolutely, Jayant. I think you just summarized it up great. So, this is compliance by association, right? Because let's say we have the UK Anti-Bribery Act or the anti-corruption laws in the US. They're more stringent or whatever. But once you are signing off or a contract with a US client, and he says that I'm fine to buy whatever you have to sell to me or the services you're providing, provided you adhere to this, sign this up and you adhere to this, and that actually pushes your own compliance bar higher. And today, if you are an unlisted company and but you are providing quality product to an overseas client, let's say Apple, for example, or any of those. But the moment you're doing that and you want to obviously retain that business, and your client is going to say, customer is going to say from us is that I'm fine to continue buying from you, so long as you a sign up this contract, B walk the talk, because you'll have to then very clearly make this up as an annual thing. So and look at the ESG thing, because it's part of the annual report. Look at the engagement, which is what I think we're talking in the next slide about how they should actually come down from the top. So if I'm that overseas client of an Indian unlisted private limited company, who's my supplier of a very important component, I'd say that I'm fine to buy it from you, but you should ensure that you are getting this in place, and you also have a sign off from your board that they are fine with what you're telling me as you have complied. It just can't be a compliance done by a person who's in charge of that part of the business.
Right. Great. I think lots new things coming up for us. Okay.
Yeah, huge shift that
Huge
the
shift.
industry is going to see.
Yeah. So I think
So
this. Yeah. Yeah. Vic.
go ahead, please, Jen.
Yeah. So I'm. Maybe I just want more of a discussion on this particular slide. So we've Rajendra, you want to put some of your thoughts? Um,
No, I think you have a fair amount of what you could say, standards set out for ESG monitoring and reporting, and I mean obviously across the world, and we would also follow through very soon as it goes about. the Indian companies who are also in compliance with these standards has been spelled out. The report says that it doesn't mandate a particular set of standards currently. I think at some point in time we will also develop something, but that actually is one of the most significant challenges at implementing ESG. See, the entire thought process is right there. As I said earlier in different forums that I've been talking about ESG in the past 1 or 2 months. This is, I think, my fourth or the fifth discussion I'm having on ESG. So it's definitely out there, and it's people. There's a rhetoric. People get it. They say, okay, we hear you, we understand, we need to do this. But what are the standards that we need to aspire to? What are the standards we need to adhere to? And there, that uniformity cannot come in for the simple reason that what applies in India, from a climatic change, are you able to differentiate for the equity, the condition, and the size of the economy of how you are placed. You can't just be equating a standard in one country to another for several reasons. So these are the standards, and therefore, if you are adhering to which is a norm under your current pollution control board requirements, which are, let's say, it should be any which way a mandatory thing, and you should follow adhere to that any which way, whether there is an ESG or there is or not a BRSR or not a BRSR core, you have to comply with it. If you don't, you face the risk of prosecution, fine, penalties, and everything. But if you are also complying with something different, SEBI says you're more than welcome to do it, and you can call out what you are complying with in your report, and you do not have to again state it. You just can reference to where you have mentioned it, in elsewhere in the report, and but we should know what it is that you are standard that you are adopting for compliance with regard to your BRSR disclosures in your annual report. So that's something that's basically comes
So,
out.
so the Indian companies which we have mentioned here, so these are they are doing these disclosures voluntarily. It's not yet mandatory
No,
because
not.
these are not Indian standards.
These are not adopted. To my mind, they are not adopted. They are actions which would be you voluntarily pick up and say that, okay, these are the things that I'm adhering to, and then you would have to call those out as to what is it that you are you know uh, what benchmark or what standard you have adopted. Vivek, you have a view on this, or this is correct?
Yeah, so some of these companies proactively have been reporting these voluntarily, and some by way of their presence in respective markets. For example, you would see a lot of software
Mhm.
developers, exporters that you would see here, which are listed on US stock exchanges or London Stock Exchange or any other European stock exchanges. So some or other mandate or statute asking them to make these disclosures is one aspect why they are reporting it, and reporting is one aspect. I think the more important impact is that because of such reporting requirements, the internal systems have evolved for these companies. So the names that you see here, most of the companies have a evolved corporate culture, evolved governance standards, and somewhere or the other, these reports are the trigger.
Right.
Yeah.
Okay. Let's move next. So, while this is a very self-explanatory slide, so just want to, quickly, touch upon this. See, these reporting frameworks exist in in a global environment today. All the developed countries, larger economies, if you would see, they already have such standards and disclosures in place where the reporting are happening. So if the company that, Vivek just mentioned that maybe some of these companies maybe were doing business in those countries, or maybe they are Indian companies which are also listed in the stock, those stock exchanges have also already adopted these principles. So,
Right.
right. And if I would say, I think we have to also look at the macro level view. It's not just about, which I have to now do one or two extra reportings. But I think at the macro level, if you look at, all these development, I'm saying is you look at from the starting from US to, to Singapore, to Japan, to, Europe to even China. and the UN have some, some their own standards as such. No, these are larger economies, and if India today is becoming a shining spot, India has to adopt to the global standards. We have to think, talk, and act like a leader. Now, if we have to be a leader in many ways, I'm saying is while I was saying in service sector, we were always the shining spot. But going forward in manufacturing also, if we are trying to do that, these standards we'll have to adopt to. You look at infrastructure companies today, the large, have become very, very big. Going for, there were days when we were looking at the large projects, were going to the global, in India also, we're going to global companies. I'm saying is today, Indian companies are picking up large infrastructure projects world over. So if we have to think on those lines, we have to start adopting these standards. So I think more about us, the thought process change in the board meetings at every level is that it's not just a reporting requirement. It's a leadership position which we are going to take, and the leadership position cannot be taken if we are setting our house in order. If we are becoming a business which is sustainable, business which looks at the holistic view rather than just looking at their profits and the sales in the next quarter, than in the next year. I think we'll have to be more inclusive. That's the point we were trying to drive from here. Yeah, Ankita.
Just one comment. I think, yeah, I mean, this is really helpful to know, that there are so many countries, and obviously, who have been way ahead of, where we are in their ESG journey, the sustainability journey, having developed and adopted, a very comprehensive, programs or benchmark mandating it that entities there or their value chain partners, like therefore India comes into the picture, are also come in compliance with this. When we adopt it, I think we would be mindful. The caveat is to see that what applies overseas, you'll have to tweak it to fit into the Indian scenario in terms of the various positives and even challenges that we have in India when we adopt those policies. And this applies whenever you do a policy advocacy, interaction with the regulator or industry associate through industry associations. It's always been that you need to figure out what are the best practices and see how they can be customized to fit the Indian reality and how we are. But that would be the right approach to take. What you're saying is, yeah, we definitely, there are now a plethora of best practices available for us to pick and choose from and see what applies to India.
Yeah. Okay, let's move to the end of this discussion.
Yeah, the to-do slide, to-do for corporates. Yeah, there's a huge to-do list. Vivek, you want to go ahead, or I can start off and then can request you and Jayant to add if that's fine with you.
Carry on, Rajendra ji, please.
Yeah, okay. So I think the to-do list for corporates is like significantly huge now. Basically, putting up all of these things in paper, there's no confusion at least as to what applies, what is the timeline, what to say, and how you want to go about it. But I think the expectation has to come in from and the expectation of the stakeholders is that the senior most level in an organization takes full ownership of this. And I think you need to focus therefore as an entity, and as the complaint said, training of board members in the relevant areas, ensuring that there is a ESG oversight mechanism is in place where you have a management oversight of what actually is happening at the ground level on a continual basis. And if that is something you are able to deliver to going forward, then it's really very important. You have to continuously engage with the stakeholders. I mean, but more importantly, as I said, you need to identify and engage the appropriate ESG expertise. You need qualified personnel to manage the ESG related matters in sufficient numbers. Uh, Within big organizations, there's always going to be a challenge for cross-departmental coordination, and Vivek will agree with me there are territorial issues. There would be issues that you will face when you are seeking out coordination. There might be functions who would typically figure out that okay, this a certain document or a certain comment or a certain action is to be a part of a annual report, then it's something that should fall squarely within governance, unmindful or not appreciating the fact that the components of that report are something that comes from various functions and departments. I mean, there's nothing little or absolutely nothing for legal, regulatory, compliance, governance functions to do with what specifically, let's say, happens in the operations on a daily basis or HR on a daily basis. You'll need to also keep a very high and sharp lookout on the quality of data that comes in. And without technology, that is absolutely not possible. So you need to ensure that the data on the basis of which you are making a report is, and even taking actions which are corrective, is absolutely sacrosanct, and it is very clear and accurate in every particular sense. So these I think are broadly the actions: training employees, ensuring that that training actually ESG is created as a clear part of the employee psyche. Employee psyche is important. Only then it will pass on to your value chain partners. I would encourage that companies should progressively consider making ESG as a 15, if not 20, at least 15% weightage in KRAs. At, let's say, manager or senior manager level. In fact, it should be higher as you go up, and I think the company is already mindful of that, and they are doing it. I know a few companies that are doing it currently, but that is something which, once you tie in KRA to your ESG output on an annual basis, and then there's a review which happens periodically, I think then you are definitely planning to be and more likely to be in a better place than what you are currently. So, and progressively you'll be moving the needle on the ESG compliance and your disclosure obligations as well. So I think these are broadly the thoughts that come to my mind when we talk about what corporates should do. Remember, SEBI is also, while it's not mandated, who should be. The question which I fielded at the last webinar, with Lawrbit, was who should, Jayant had put that, who should actually be leading the ESG mandate here. My quick answer was that maybe the compliance governance team, because you actually own the complete governance aspect of the ESNG. You already own the G here, and you are mindful. You understand where all of this is coming from, and you can look at it. Always better to have an oversight of what is going in the public domain, more so as a part of the annual report, because as company secretary and the compliance head, you are responsible to see how that communication goes. But SEBI has also said that the senior most person, whether it's a director or a committee or a director, if you look at the SEBI LODR, it just talks about regulation 15 and then schedule 2 part B. C says that it's to formulate a detailed risk management policy which will include a framework for identification of internal external risk, specifically by the listed company, for the for ESG as well. So would you what would should it be part of the RMC, the risk management committee? Do you want to have a separate committee of the board which looks at the sustainability measures in a light that is slightly, it is beyond risk only, it's about how you are going to be managing things, what areas you've identified. So all these things come into play. SEBI doesn't say, it says the senior most director or employee or a person or a committee of the board. So there's an indicator there, like who is actually going to be looking at it. To me, it's not a one-person show. It's not a one-person thing that, or a director to be a part of, and he can obviously be the one who reports to the board about it. But you will need to have a committee which comprises of the thing. People who come to my mind immediately are obviously the compliance head, the CFO, the head of HR, because social directly impact what your impacts comes through there, and there can always be others who will be part of it, and then between the three, they can jointly report to the RMC or to the audit, or to the board. I mean, through or to the RMC or audit, and then on to the board after the board committees review it. I think that's the way we should be looking at what corporates to do. Over to you, Vivek and Jayant, for your thoughts on this.
Rajendra ji, very, very pertinent points from your experience. A couple of things that came to my mind while you were we are discussing about it was one thing, one approach of adopting the responsible business guidelines would be that the companies try to map their vision, mission, and values with the 9 principles and their core elements, and they need to prioritize these. So the top priority things has to be implemented in the staged manner. So the top priorities can be implemented in the first stage by the companies, and then the other reporting requirements can be looked into. So that's one perspective that I have. And you rightly said that there it has to be a committee which kind of operationalizes this, and this subcommittee can also report to the CSR committee, because many places we have seen in the industry that the CSR committee has also been given the terms of reference of CSR committee has been the sustainability objective of the company also.
Yeah, correct. Yeah, correct. Yeah, so the given the I would say the outcome, or given the overall impact that the sustainability effort that company would actually go about and do, as we look at the BRSR and the ESG, mandate from coming in from the government, I think the CSR and the RMC can be feeder committees. They would, because RMC looks only at the risk, the
Right.
CS very clearly, as you rightly call out, focused on the social aspect. Let us say, as I said, HR, let's say employee related, but the CSR has social, right, is its middle name is social, right? So it cannot move away from that. So the RMC and CSR can be feeders to this committee, and this committee can look at the whole thing in a more comprehensive manner, because unless that happens, I think it's not going to, the real culture, the ESG being part of the culture, will never ever happen. It's today, to a large extent, I can say that it's unfortunately still today, it's still a tick box thing. When you look at the BRSR reports in listed companies, they started obviously to come out a long time back. You see that some of the questions are, hey, this is not applicable to me, so okay, this is fine. This is those kind of responses you still get to see. You look at the nuances still, that I'm just ticking off what is applicable to me and what is not. We need to move out of that culture and come up to really owning this and making it a part of our DNA, and that can only come from the top, and then clear acceptance that this is what applies to me, and therefore we need to do it. For money, if not for anything else, because the entire reason here is it makes complete business sense to be focused on ESG, nothing more.
See, I think one very important aspect here is, see, nothing changes overnight. These are all perceptions. These are all the way we are doing business. And if I go back, uh, see, there was a time we were all managing books the way we were managing, right? There was not so much of check. The CFO came in. The CFOs owned up. He said, "Okay, I'll clean the books. I'll make it more transparent, and create awareness." They owned up, and today they are the part of the board. There were a lot of changes happening in the next wave. How people need to be treated, equal remuneration, gender diversity, and a lot of these things came in. The CHRO, pitched in and said, "Okay, fine," or as the HR team pitched in and said, "Oh, fine. I would, get these things in place." They started creating awareness. They started making noise about it. Repetitive evaluations, training, everything. All this thing happened, and we are seeing the change. I think on ESG also, where the compliance officer needs to take a lead and say, "Okay, fine. I'm going to take this over. I'm going to make noise. I'm going to gain, create awareness." It's not going to happen overnight. People will have to start changing their mindset. The gender diversity never happened overnight, right? We were 15 years back, 20 years back, we had to hire a female employee. They were 10, I'm saying is even 10 years back, I'm not why even 20 years back, 10 years back also, there were questions around, asked around it, will she go to work? Will she go night? We should do a night shift and all that. So today, I think those questions are not there, when, in the interviewer's mind. Same thing here also, things will change, but I think we'll have to be consistent. We'll have to start making noise, so that slowly people started adapting to it. I mean, today is not, just shrugging off and saying, okay, I'm not, BRSR is not applicable on me, and I don't have to worry about it. It's only with top 50, 250 today and 1,000 company down the line should be worried about it. I'm not in that race. But we'll all come into that. Until the time, we'll all get covered. I think we should be a champions about it, in creating noise about it in different functions in the board, so that they are aware, and when the right time comes, it becomes easy for them to make a shift. This shift is not going to happen overnight. We are not used to it. Reporting is just one part of it. I'm saying I'll be able to report it easy, when I'm doing it. Otherwise, I'll just keep hiding things in my books.
Right. Report is one milestone of the journey.
Yes.
Yeah, I mean, that's just a document. I mean, that's exactly what we need to move away from. You're absolutely right on that, Jayant.
Yeah.
Right.
Yeah. Thanks. Yeah.
So thank you so much. I think this brings us to the end of the journey. It's quite an interesting topic, and more and more I'm talking about it, and I'm started liking. I'm getting more engrossed with this. I don't know, but I think this is very important. It's I'm just not just as a part of a professional, but I think on a personal journey also. I think this is something which is very important. It hits us back home. Uh, it's important for us to talk more about it, understand more, and go deeper into it. I thoroughly enjoyed this discussion today. When obviously we've been preparing for this, but when it actually comes on to talking about it, and start changing your perspective. I think I'm liking, and I would want to definitely do more, go more deeper. I don't know how how these things evolve, but yes, this has to evolve.
Sure.
Yeah, what we see now is, I think, if I can take that example, is tip of the iceberg. This is right now only on the listed company, and that to top 1,000 listed companies.
Right.
Gradually, this is going to be applicable on each and every business.
Right.
Whether small or big or whatever size, listed, not listed, it is going to be applicable on each and every one, and the reporting requirements. Then there will come up special assurers, expert assurers on various fields. Right now also, we have seen approaches like one single assurer taking care of all the points. There have been aggregator of an assurer which gets back-to-back certificates on various topics, and then aggregates his report, and then places out a consolidated report. So entire ecosystem will get developed over a period of time,
Yeah.
and the questions are qualitative, but still a lot of them are quantitative. So the qualitative aspect will come in. So all those things we'll see gradually happening.
Yeah, not too far from, even having a slice of ESG experts who can also, look at deeply into your value chain, identify who are your value chain partners that you should focus on, and who you may need to eliminate and look for someone different. And those value chain partners who are actually high up on your, on the BRSR scores on the relevant areas, they might consider an opportunity of expanding, backward integrating, or maybe or making a different additional offering of a service or a product that is important to you, because they know that they are already accredited, they already are there in the ESG metric, and you looking at them, in a manner which is positive. So if you categorize as an entity or as a customer of a value chain partner to in a scale of A, B, and C, where A is the best compliant entity, those who get into A, you don't have to look again beyond it, and that person can actually, then expand his scope of offerings as far as you are concerned. So it makes sense for him also. The B and C developing it, is just not will take more time than takes to develop, that similar capacity there. So I think these are clear indicators, opportunities for all. And sometime back I read that there were like 14,000 companies incorporated during a quarter or a month in India, and we're just talking about 1,000 listed entities here. So as Vivek pointed out, and obviously the company law committee report that has come out saying that they are looking at having a rigorous framework for unlisted companies, for the regulatory framework that compiled with your value chain, the route, you will have unlisted companies also coming into this into the ambit of the ESG compliances very soon. I mean, they already are through the value chain, but very soon it will get more formal for them also to do it. It's no longer going to be, voluntary piece at any point in time. The timelines are fast approaching, and we're going to very soon come up to a situation, reality, where it applies. Like it already applies to you, but now you're starting disclosing it voluntarily and involuntarily, I mean, mandatorily, whatever. So the great discussion, Jayant, fully agree with you. Today was a fantastic time. We were like 2.5 hours, and I think I did not really see the time passing so quickly. So fantastic discussion. Thank you for organizing this.
Thank you so much. Thank you, Rajendra ji, and thank you, Vivek, for spending your time over the weekend. And thank you so much for everyone with having this, patience today to stay back and listen to our conversation. We'll be posting this recording on YouTube as well. And there was some question, was someone that you can share the presentation. Please write to us. We would, respond back with the deck if you need it.
Okay. Thank you.
Thank you. Thank you, everyone. Have a good
Thank
day.
you.
Thank you.
Thank you.
Thank you.